Hello, everyone. This is the Revolutionary Think Tank podcast. If this is your first time here, this is a podcast about political commentary, protest music, and revolutionary thinking. My name is 4AS, and this is my co-host, Mr. E. So, Mr. E, how are you going today?
I am very well, 4AS. How are you, sir?
Yeah, I'm going pretty well, and I guess it's a milestone today because
Mm.
today, if you include the pilot, it's 50 episodes.
Yay! Hurrah! 50 episodes. All right.
Well, we have been doing this for over 2 years now, so
Really?
yeah, since
Wow.
January 2022. So
Wow. Yeah,
time
very,
flies.
yeah, monumental occasion, 4AS.
Yeah, time
Yeah,
flies when you're having fun.
yeah, apparently. Far out, 2 years. Yeah, I didn't even get the champagne ready for this. I'm underprepared, 4AS. I don't know what to do.
Well, to be honest, mentioning champagne, that's a good segue because the topic we have today is what I would like to refer to as bourgeois accounting.
Bourgeois accounting. Interesting.
Yeah.
Okay.
So, okay, I'm being a bit glib here, but what I'm actually referring to is carbon accounting.
Right. Okay.
So, so, I guess to get the viewers up to speed, recently this year, the Australian government announced that they're putting plans ahead. So basically, at the
Mm.
start of the next financial year, so the 1st to the 7th, 2024 of this year, all companies are going to have to start doing sustainability reporting. And they put in a roadmap, if you will, or at least a guideline that by 1st to the 7th, 2027, all companies within Australia will have to do sustainability reporting, etc., etc. And therefore, because of this, a lot of companies are getting involved in sustainability agreements and also looking what they need to do to get to net zero in 2050 and all of those targets. And carbon accounting is basically the where you start to identify what your carbon footprint is.
Mm.
And well, because I am an accountant, I've had to start looking at this stuff because of work.
Oh,
And
really?
yeah, and
Right.
I have my thoughts. So I thought
Mm.
it would be a good topic to cover today because
Mm.
I feel like there's a lot of social aspects to it,
Mm.
a lot of political aspects to
Right.
it, and
So, like, what
how
is carbon accounting, though? Is it like how many, I don't know, liters of fuel you burn in your business operations to like get your supplies to your work site and like all that sort of stuff? Is it like, is it measuring your carbon footprint?
yes, the latter, but what you talked about before is also relevant as well because
Hmm.
that's the whole point of. You've probably heard the term of like your scope one emissions, your scope two emissions, and your scope three emissions. What
No,
that
no, I haven't
basically.
actually. Please
Okay.
divulge. Yeah.
That's the whole point of all of that jargon is um, from from when you make something to get it out the door. So what they call
Yeah.
your cradle to gate stuff.
Okay.
Um, it's measuring that carbon that you actually produce within the building. So, was your company, if you will.
Okay. So
So
like turning the lights on.
that is definitely part of it as well. It's probably not as intensive as, say, for example, you're a manufacturing company and you're
Mm.
producing. Let's go with the classic Adam Smith example
All
of you're
right.
a pin factory.
You love
Yeah,
pin factories for us. My God.
but like, yeah, you're a pin factory. So let's use that as an example. What
Yep.
measuring your carbon footprint basically is in scope one, all the machinery, so basically all of your assets and
Mm.
everything that is within the organizational boundary. So
Yep.
like
Yep.
what you classify as your organization, the assets and all of that thing, um, what carbon footprint they actually produce. Because what you actually have to go into the granular details is all of these carbon footprint carbon accounting subscriptions that are out there, um, which are connected to, like, say Zero and MyUp and all of that. They have all the government averages. They have all of the data up until this point where it's like, oh, you have machine X that is similar to, sorry, you have machinery that creates pins. Uh, that is similar to the machinery that we have on our register, and this produces on a daily basis this amount of carbon footprint. Like
Is that
you
like
can
based
look.
on like how much juice that machine like guzzles in terms of like how much electricity it needs to run, and if it's kind of running from like not a renewable source, then then they've got like like a cheat sheet somewhere that says how much power or carbon that machine is using. Is that what you're talking about?
Yes. So if so what they do is um, they base it on how much specific information that you can get.
Mm.
So say you have that specific machine that creates pins.
Yeah.
You have the receipts of the fuels that it uses. Maybe it also uses electricity. So you keep a track of your bills that you acquire,
Yep. Yep.
and once you have all of that, I guess, primary data, you can combine that with the information of the government averages that they have, and at least for your scope one, you can therefore determine how much carbon footprint your specific machine creates, and and it's also easy because these subscriptions, they go through your accounts and they pick up all the spend data. So say for example, on the company credit card I spent say $50 in order to buy the fuel for the machine that creates pins. I can therefore go through my carbon charter accounts and then put it to the fuel for the specific machine, and then bang, that'll contribute to the carbon footprint of that specific machine.
Well, slow down.
Now,
Start again. Explain that
yeah,
one more time. Explain that again. Sorry.
okay. So if I have specific receipts,
Yes.
these kind of subscriptions, they're designed in order to at least look at my receipts, and then I can basically, like a normal accounting system, I can assign it to a specific a piece of machinery or a specific item that is linked to that carbon footprint asset, if you will. And then I can just assign things, and then Bob's your uncle, that everything's done. It's just like a click of a button, if you will. But the scope one is basically your assets. Scope two is electricity. So it's technically at a power plant that's off in Blogsville, if you will. They are the ones that are actually creating the energy, and we're buying that energy off them in order to use it to power our factory. Now, the thing is, whilst we're technically not creating the carbon footprint, all of those data and sheets that I was mentioning before, your bills actually say like, oh, how much kilowatts are used, and then you can basically just punch that in, and you can show how much carbon footprint you're producing, because for your work in order to function, like your factory in order to function. And then what they say is 90% of your carbon footprint is scope 3. And basically, this is where things get a bit tenuous. Scope 3 is what they classify as everything else. And this is, I wouldn't say my bugbear with it, but at least this is where things start to get a bit complicated. Like, people are kind of quite fine with your scope 1 and scope 2 because, well, that is fundamentally under your control. So you have your assets, you probably have access to your electricity bills. So measuring that carbon footprint is fairly straightforward.
Yeah.
But you, like with the carbon footprint with Scope 3,
Mm.
things can get tenuous when you are looking to your employees and you're like, hey, so can you fill in the survey for me and let me know, how do you get to work? Do you drive? Do you walk? Do you ride a bicycle? And then from that, you have to extrapolate um, how many like the carbon emissions that your employees do in order to get to work.
Right.
Like obviously, that's far more tenuous compared to, say, for example, you have a supplier which delivers all of your goods.
Yeah.
So these
Yeah.
pins, in order to take it to ABC company. Now
Mm.
that is actually far more simpler because, at the very least, sure, it's not as it's not as accurate as, say, for example, you went to ABC company and you're like, hey, what is your carbon footprint? And they were able to give you those
Yeah.
details.
Yeah.
Um, at the very least, what these programs do is, so you've got a bill for $100, for example.
Mm.
You then punch in, oh, hey, this is a delivery company. This is for goods and services, and it gives you at least an industry average of
Yeah.
that type of company and what the bill should be a carbon footprint
But
to you.
like, is there not some double dipping going on there? Like, if I have to figure out what my supplier's carbon footprint is in relation to me, but then they're counting their carbon footprint, which is inclusive of the service that they're providing to me. Isn't there a bit of a double count there of the carbon footprint? Like I'm predicting or I'm accounting for what is my carbon footprint because they're delivering to me, but then they would also do their own deliveries as part of their own accounting. So isn't there like a double up there?
Well, that's where you have to analyze whether something's upstream, which is your suppliers, your suppliers in order for you to create your goods and services,
Yeah.
or whether it's downstream, which is a different classification of your scope 3, which is I've created something and then I'm giving it off to someone, and then they obviously
So
have
you
their
include
own.
the incoming, but you don't include the outgoing.
No, you're actually supposed to include both.
But like,
But
how do you
each,
stop
but
it from being double dipped then? Like, doesn't the other company that's supplying you with service, they're delivering stuff to you or taking stuff from you, don't they have to count their own trips as part of their carbon footprint?
this is where the organizational boundary for me gets a
Yeah.
little bit
And that's
gets a
what you
little
were
bit
talking
tenuous.
about before. Like,
Yes,
this is
gets
where
gets a
it
little
gets
bit
hard.
tenuous
This seems
because
crazy. So, like, can I just, before we go into more of the technicalities of how this
yeah,
is,
yeah,
calculated, what is
yeah.
the point of all of this? Why do we do carbon accounting? Like at the end of the day, when you come up with your calculations, are you going to be taxed on that? Like you would be taxed after you see your accountant, or hopefully get some money back because you're about to get a tax return. Like, are you about to foot the bill for something? Why would
No,
people want to be a part of carbon accounting?
I would say that there's two major drivers. There's one the sustainability reporting, which is going to become a government necessity.
Yes.
Which so I think one is that there's going to be government pressure, and
Yeah,
that's
but
the reason why.
they're
Yeah.
gathering data then, just so that they can measure as on a national level how much carbon it takes to make this country go round. They're just literally accounting.
No. So this is where I mentioned the 2050 target of carbon neutrality.
Yeah,
So
yeah,
so as things stand, w- the way society functions right now, we're producing a certain amount of greenhouse gases
hmm
that are going into the atmosphere.
yes,
Now, um, like pretty much leading up to this point, we've kind of been steadily rising in the amount of greenhouse gases that we've been emitting, and we've
Mm.
gotten to a stage where, well, we are increasing the greenhouse gases that are surrounding our atmosphere, and it's exponentially warming things up.
Yep.
Just to look, I'm no scientist, but that's the general idea of what they're talking about.
You're not?
Uh,
How dare you speak about this topic, 4AS?
but and what they're doing right now is the big companies, so definitely like mining companies or any of the big companies that are out there right now,
Mm,
they're wanting to get to a point where from the big companies, we understand what exactly is their carbon footprint.
mm,
And once they have understood what sustainability is,
mm.
and at least once they know what their carbon footprint and work towards that 2050 target,
Yeah.
um, not only is there going to be government pressure, but then the understanding is that there's going to be societal pressure that once people are forced to do this sustainability reporting, society will therefore society will also reinforce this as a norm, and because it's in the Overton window, other people will expect you to do sustainability reporting, and it will be
But
a
like,
knock-on
look,
effect.
just because you report on something doesn't mean there's any ramifications of it. Like, you can report on anything. Like, I could write a
Yes.
report to you to tell you why 50 episodes of the Revolutionary Think Tank podcast is absolutely a stunning achievement and we should retire and never do another podcast again. But like, we don't have to act on that report. So like, I'm trying to establish here, what the hell's the point of this accounting system? Are they just accounting so then by 2050 they can be like, all right, that's it, we have to be neutral, everyone, like kind of thing, and like everyone just has to kind of drop because they've been accounting for so long and they know what everyone's numbers are, like, or is there a system of paying off for things? Like if you're a big carbon producer, let's say, like I don't know, you mine coal, or you burn lots of coal for some reason. Is it like the biodiversity credit thing? It's just like, all right, I want to build on this side here where there's an endangered community. I'm going to wipe them off the face of the planet, but I'll buy some biodiversity credits and I will just save an ecosystem somewhere else in Australia, like kind of thing. So like you can offset your impact on the environment by helping the environment somewhere else, which makes absolutely no sense if you ask me, that whole biodiversity credit system. Because like, okay, I'm going to wipe out this endangered snail here, but like I'll put some money into protecting those endangered pelicans on the other side of the country. But like, it makes absolutely no sense, but it's a credit system. So like I can buy credits and help someone somewhere else to destroy the environment over here. So like, is it the same kind of thing? They're accounting on how much carbon you're using so they can just turn around to people that use a lot of carbon or have a big footprint and just say, all right, well, you have to buy credits now. And then they
Well,
use those credits to then, I don't know, invest
you
in green technology or something.
Yes, but I think you might be preempting my gripes with this system, or at least my investigations thus far, because of what I've had to investigate during work. Is
Mm,
that, look, by all means, if a whole bunch of companies want to do like a whole bunch of big companies want to do sustainability reporting and report about how amazing they are, like
mm,
they should
mm,
go ahead and do it. But when you actually have, say, small to medium enterprises that want to engage in this, in these sort of products, and be like, oh, okay, well, should we investigate as to what our carbon footprint is? Maybe we can do such action like, I don't know, put a solar panel on our roof, and maybe we
right.
don't have to use a supplier that has a greater carbon footprint. Maybe we can lower things like that.
Mm,
That was the direction that I thought that using these kind of subscriptions. I preface this as they are, by all means, there might be an awesome AI algorithm that completely blows the industry out of the water between now and next year. But I digress. As things stand, what I'm not impressed about is not necessarily huge businesses coming out and saying how brilliant they are. It's when small to medium enterprises decide to engage in industry, um, this industry, it's actually technically not tailored for them. So
So
I'll
it's only tailored for the
explain.
big boys, the big players in town.
Yes, as things stand, as at February March 2024 in Australia, it's meant for the big boys because
So does that
when
mean
I
there's going to
actually
be carbon accountants out there? So like your version, like a tax accountant or a financial accountant, but like there'll
yes.
be people that specialize in carbon accounting.
Correct, because I can tell you right now, when we went to the subscription that we used, it prided itself on the academy that it did in order to upskill people as to what carbon accounting was, and there was like the very first thing you did when you clicked on it is like, oh, are you looking for a carbon accountant? Are you looking to um, qualify as a carbon accountant? So that
Hmm,
was like the very first thing.
interesting.
But then what I found interesting was engaging with the subscription and everything. We actually sat down with the consultants from this place, and they even said to us when we were like, "Oh yeah, we were just looking to trial the product and do this, do that."
Hmm.
And then when we mentioned how big our accounting team was, they were like, "Huh, yeah, that's actually a really small accounting team. Can you get somebody from admin to help you with the data and all of that?" Like they were already talking around, and it's very obvious that people that have engaged them before, they've been from big companies and they've had dedicated carbon accounting like sections,
Yeah.
so they can do the sustainability reporting.
Hmm.
And like it just wasn't really a good impression when we encountered that they were like, well, as a business, if you want to do this sustainability reporting,
What do you mean
you
you want to do this? Is this not going to be mandatory for everyone?
no, I'm saying they seemed confused that a small to medium enterprise such as the company that I worked for was engaging them right now.
Hmm.
So it's not necessarily that it'll never happen. Like I said, in 2027 for Australia, like every single company is going to have to do this. And if I remember correctly, I think we have to reduce our carbon footprint as it stands to like 50%, like below 50% um,
Of what it is
by
now.
2030.
Okay.
I think that's correct.
And like,
I'll
so
have to
people
fact
can do
check
that
that.
by like figuring out what their footprint is. And let's say the majority of their footprint comes from their electricity consumption, right?
Yes, yes.
Then they can put solar panels on their roof
Mm,
and then buy an inverter or a battery
yeah.
and then produce their own electricity.
Yes.
And
So,
that will
like,
like neutralize their carbon footprint.
yes. So, yeah, the fundamental purpose of one establishing your carbon footprint is then to actually do strategies in order to um, make you carbon neutral eventually. Where,
Interesting.
like, obviously, um, there's the like for example, if you do travel, so say you have a business trip that you have to go somewhere else,
Yeah.
like sure you could use the strategy of getting those carbon credits that you were saying before, but that's probably not going to be as effective as yeah, you're using a high electricity carbon footprint from a provider that uses coal power stations. So
Mm.
it's going to add value to you if you just put solar panels on your roof and then you become self-sustainable.
Right. Right.
But
Interesting.
but I want to come at this from an accounting's perspective because philosophically I do find it interesting because from what I looked at with investigating your scope one, your scope two, and your scope three, um, I like just I can see that it models the idea of budgeting. So, say for example, you have your income and your expenses for 1 year. So, say you did really well with your income, didn't really have that much expenses. So you have a baseline year, and then budgeting would be, oh, since we did so amazingly, let's let's predict that we're going to get some great income and the trend will continue that we won't be spending that much. And then when it comes to the end of the next financial year, you then have a variance. You say, oh, okay, we did really well with our income. Oh, actually, we didn't anticipate that we were going to buy all of these new assets for, and so our expenses went up. So there's massive variances there. So there's a reason why our budget and our actuals are completely out. That fundamentally financial accounting perspective, that is comparing apples with apples. Now, the funny thing with carbon accounting, and even when I was doing the carbon accounting course, they kept on emphasizing whenever you looked at scope one, scope two, or scope three, they always go, okay, well, if you have primary data, that is the most accurate thing that you can grab. And then they have below that, they have aspects to it where it's like, oh yeah, you can use average data. So you can go to the industry average of, like I was saying before with the scope three, of if I can't get access to a delivery driver's uh, like fuel receipts and all of that, which is fairly likely.
Yeah.
I could use, Google Maps and determine, oh, well, their Home Depot is here. In order to get to the office, it's this length, and I can use industry averages with a distance formula in order to determine,
Like what?
yeah, based on industry averages, that's what the carbon footprint is.
Right.
And then even lesser accuracy, which is, oh, I have the spend data. I can just use the averages here in order to figure out what my carbon footprint is.
Mm.
Because if you actually looked at more primary data, um, so, the classic example that they use is, say you're flying from point A to point B. If you have an economy ticket, your carbon footprint is going to be far less compared to if you bought a business ticket.
Yeah.
So even though it's exactly the same distance, because you're using spend data, it's your carbon footprint is different. So it's better to use primary data rather than the spend data, which is less accurate. Now, this is where my philosophical problem comes in.
The suspense.
Where my problem comes in with that is that with budgeting that I was mentioning before, you are comparing apples with apples. Like, sure, the difference you have is, well, it's not until you get to the end of the financial year that you're able to compare variances. But, dollars equal dollars, cents equal cents. Like, there's a commonality here. However, with carbon accounting, you're comparing apples with a half apple. You're comparing apples with a quarter apple. Because if you're using spend data, if you're using averages data, because that's all the information that you have that year, then maybe you improve your processes, and then suddenly you have greater information. So say ABC company with your company, they're suddenly doing carbon accounting, and they have much more of an understanding of what their carbon accounting is. The assumption with that budgeting that I was mentioning before is that you have a baseline year and you're comparing it with something.
Yeah.
But if you're improving your processes and you're improving your accuracy with your carbon accounting, then the data the previous year where you were less accurate, can you necessarily use that as a base year?
Yeah.
Shouldn't you be using the current year as a
Yeah.
base
If
year
the
and go
more
from
accurate
there?
you get.
So,
Yeah.
so, so basically, where I find it quite ironic is that uh, accountants love to deal in certainty and risk aversion. This carbon accounting idea and philosophy is bringing uncertainty to a certainty-seeking profession,
Mm,
and I
yeah.
found it as a very interesting process.
Mm, mm. Um, what I wanted to probe you on though was
Yeah.
something that you brought up like right at the start, um, which is this is rather a bourgeois system.
Yes.
And like, what did you mean by that? For us, may I ask?
Well, I guess I've kind of already mentioned it before, but I just again, I'd like to preface that they could be an AI that comes in and completely knocks this out of the park, and it's super simple for small to medium enterprises. And all my criticisms are completely thrown out of the window. But it just seems to me like this sustainability reporting and this way of doing carbon accounting, it's tailored towards big companies who have the manpower, if you will, in order to do this carbon accounting.
Right,
Because
right.
because the thing
What do you
is,
mean? Okay.
I I was obviously doing this investigation along with my other accountants at work, and we basically had to report back to the head of finance and say, "Hey, we really want to do this, but we don't want to be guinea pigs for a bunch of startup guys, and then agree to do something, and then they completely change the game on us,
Yeah.
and that sort of thing." So I guess what I'm trying to get at is it seems this accounting industry is prey to the market where um, everyone's like at the starting line waiting for a great product to come out. And then once somebody great, great is found, some technological genius, some, I don't know, Steve Jobs, if you will, that does carbon accounting great, then everything will go soaring forward.
Yeah.
But it seems like nobody wants to be the sucker um, who tests everything out and then has to completely change their processes until then. It seems like nobody wants to be the trendsetter, if you will.
Yeah, right. Interesting. I see. I thought you was gonna say it's bourgeois in like another sense, like in the sense that like this whole kind of accounting for carbon in order to kind of like offset it somehow is like just another bourgeois game of charades, like kind of thing. Like in the sense that like we're doing damage to the environment. And so like accounting for it and becoming neutral by like offsetting it and paying for other things um, is like a very bourgeois response to the problem because it doesn't actually address the heart of the issue. It just kind of like glosses over it with like, nice economic jargon and like feel good practices like accounting for your carbon footprint instead of being like, how about we revolutionize the system and change the way that we do things entirely to not have to rely on carbon at all as opposed to just accounting for it and trying to offset it on someone's balance sheet somewhere. And so, like, the concept of being able to even pay for you to have an impact and, like, you know, I don't know, yeah, offset it somewhere else is just a very bourgeois response to a dire problem, which is the warming of the planet. And, like, just measuring this stuff and like hopefully addressing it a little bit better each time is not neutralizing the issue at all. It's just kind of making everyone feel a little bit good, a little bit better so they can all pat themselves on the back.
No, but I think you do raise a good point, and I think that is happening because there's a term that's within this industry which, they basically, what I would consider lampshading, is the idea of greenwashing. So the idea of you saying like, oh, well, we are a sustainable product. You can believe in us. We don't use as much carbon as our competitors with our products. However, greenwashing is you saying that and not being able to substantiate that. So, carbon accounting and at least any of its variants, um, is all about you being able to track your products and actually show that you are don't have as much of a high footprint, that you're actually using methods in order to reduce your carbon footprint, blah blah blah. Now, if at the moment sustainability reporting and everything is being tailored to the big companies, though the low hanging fruit as far as the government is concerned, then you're not really attacking the problem at its source. And plus, um, if ultimately I have to buy carbon offset credits for the flights that I have to make in order to make the business meeting that I have to do,
Yeah.
then am I and then we're giving that sort of allowance to everyone else in order to do that. Will I, in the end, truly be carbon neutral? Like, I think you
You
do
just
raise a
what
good
you're
point.
doing is, right, by doing
Yeah.
something like that, you're doing what the bourgeois does. We live in a bourgeois society, a market society,
Mm.
and what the bourgeois does, what the capitalism does, is it tears everything that like is has some type of value or um, yeah, might even have a value as such, but like it turns everything into a marketable good. So now what we've
Mm.
got here is we've got like this existential crisis facing humanity. We've got like this actual environmental destruction that's going on, threatening the very like threatening the human race and life as we know it, and we've turned that into a market. We've turned the
Yeah.
idea that like there is an absolute environmental catastrophe coming here if we don't address it properly and like start making amends with like how the world runs on fossil fuels and like emits greenhouse gases and all of this sort of stuff, like, and we've turned that into now another marketplace where you can trade and sell pollution and like your impact on the environment, to then keep doing it a little bit
Have
more
ha-
if you have to.
have you seen the Lorax?
No,
Have you watched?
no.
Okay, well, the big bad capitalist that's in charge of like the town that the Lorax um, inhabits. He's basically an industrialist um, that sells fresh air to people because
Mm,
of all of the industrial power that he exhibits, and like
mm,
the amount of trees that he cuts down and stuff.
mm,
I,
mm.
I, I kind of feel like this is the like it's got a similar vibe to
It
it.
does sound like it. Like if you're accounting for like your impact on the environment, and like you're turning that into then like a marketable good. Like this is, yeah, as bourgeois as you can get.
But yeah, what I would say is the idea within itself is, I don't think it's a bad
Yeah, I get the
idea,
premise,
but
yeah.
but the thing is that all I've seen is them creating a market, and once you get further and further and further into the weeds, the more tenuous it gets.
Yeah.
So let me use another example. Is the subscription that I was talking about? You collate all your data, your scope 1, 2, and 3, and then you go to your carbon reporting. And then when I was doing the the lectures and all of that for that. They're like, oh yeah, so when you're investigating your scope 3, you get this sort of data, and then you have to do a certain worksheet that is able to go along with this data. And then when I actually went to the reporting, I could see that the worksheets were there, but there was no proper process 1 to 10 showing me, okay, so for no, not your customers, your employees travel to work, there's this specific worksheet, so you can record specifically your employees data for how they travel to work, and it produces this amount of carbon. Like, there was no direct 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and I could determine it. Like, the process was incredibly vague, and I was just left there, and I'm like, well, you're not really telling me what to do. You're kind of just saying, this is the process, go human.
Right. And so there's like the way this works is like there's certain like yearly milestones, or like there's certain milestones. So like
Hmm.
you do your accounting, you're obliged to do your accounting, and then by 2030 you should have, based on your accounting, cut it down to this level, and then by 2050 it'll be cut down to this level completely. And that's
Yes.
what the accounting is for, is to get to a point where people can meet certain targets at certain times. So if this is where your
Yes.
baseline is, that's what you keep referring to as your baseline, or
Yes.
what your baseline was. By this certain period, you should have this under wraps to a certain extent.
Yes, and at least the assumption is, well, there's soon going to be government pressure, and then there will be societal pressure that you're collecting your carbon footprint and you're reducing your carbon footprint. So you probably
And
should get
so,
on
like, will
this.
there be like regulators on this? Like, you know how if you like put in bad taxes or something that's suspicious, like they'll audit you. So, like, if I was like smart about this, if I was a little bourgeois man and I was thinking about like making my baseline look pretty good, then like I just fudge the numbers on my baseline to make it look already pretty low. So then when I had to meet my next milestone in 2030, then I wouldn't have to do much stuff to the business to get to meet that target.
As far as I know, there's going to be a section of the ATO that'll
Wow.
be that'll be looking over this.
Yeah. Wow.
But as to whether, when we get closer to 2027, whether there's a specific department that pops up that is overseeing all of this,
Mm.
I'm not sure,
Yeah. Very interesting.
but
Very interesting. Yeah.
I'd imagine that there would be government audits, or maybe the understanding is, when this becomes more popular, whoever your auditor is
Mm.
also has their own carbon accounting audit team that checks your sustainability reports, and you're
Yeah.
actually doing what you say you do.
Yeah. Wow. Interesting. Okay. Well, I think that was a very enlightening discussion there for us. I had no idea we were going down this rabbit hole today. Um, and like, I guess we're going to have to revisit this then in the future to see
Yeah.
how all of this sort of stuff is playing out, because at the moment it sounds pretty up in the air, um, and like potentially not really justifiable depending on how people respond to it. But we shall see.
Yeah, what I will say is that, and maybe I kind of use this podcast episode to kind of vent, because
Yeah, yeah, fair enough.
I
Vent
like, when I
away.
first heard about the concept, I was like, oh yeah, it seems like an interesting thing.
Yeah,
I wouldn't mind I wouldn't mind doing this course and upskilling myself,
yeah, yeah,
because
yeah,
I think
yeah.
like I think it's an interesting thing to do. But
Mm,
then when I actually got amongst the weeds and I looked at it,
mm.
I'm like, wow, this isn't as impressive as I thought it was going to be.
Yeah, yeah. Bit sketchy on the details, therefore, I guess.
Yeah, but like I said, you check in with me this time next year, and maybe I'm singing a completely different tune.
Yeah, I'll take you up on that 4IS. I will.
Okay, no worries. And with that, what's that synthwave art?
Hmm.
So this week we have uh, carbon accounting surveying the landscape.
Right, right. And it's like an interesting melding together there of what like is obviously quite a natural scene, but it's got that man-made kind of um, feel being imposed right through the center of the piece. It looks like it's a swimming pool almost, right?
Yeah,
One
I
of those
thought that
memorial pool
was.
thing kind of things. Yeah.
Again, I wonder if this is the AI accidentally hitting the nail on, on his head that, um, it's trying to look nature, but
Mm.
there's like a man-made
Yeah,
structure.
massive man-made presence in that. Yeah,
Yes.
yeah, definitely. AI, you've done it again. You've done it again.
Okay, and with that, everyone, remember to like, share, and subscribe this
Mm.
podcast episode. And with that, remember to keep thinking and keep learning. And to sign us off, I'll give it to you, Mr. E.
Thank you very much for IS, and to all of you out there, please remember, I am, you are, we are a mystery.